I think the energy transition is something that surprised us, yeah, for the last couple of, and just anecdotal evidence. We had a Chinese customer that actually was in our offices at the beginning of the year, and they said basically they were making very mature, stuff. Yeah? It was in power, in some analog products. And I actually said, Peter, we need your help because we're going to build a 300 millimeter fab, 90 nanometers, 90. Yeah? I said, why do you want to build a 300 millimeter fab for 90 nanometer? I said, well, it's because of automotive, power ICs, smart power ICs, and the energy transition. And he started to talk about, the energy transition that they needed and the semiconductors they need to make for wind and for solar. And he didn't even talk about the energy grid. And basically, this is some data that we got from some of our customers and some of other companies. This one is from Shell. It's an estimate that 1 megawatt of wind power will take 3,000 euros worth of semiconductors, and solar 4,000. Now, the question: what was the electricity need in the world in 2019? It was about 24,000 terawatt hour. Now you can then calculate this and take the average of wind and so on. So if all the electricity need in the world, which of course is not going to be the case, but it's going to be wind and solar, you come to significant numbers. Now, that 24,000 was 21,000 3 years earlier, and was 2019 that 24,000. So now it's 2022, we're 3 years later. That will accelerate because of the consumption of electricity. Now, if you then think about this, if all electricity would be wind and solar, the massive amounts of semiconductors are actually needed. Now, of course, there will be a mix, but it just shows you that there are things that we haven't thought of, and it's particularly in the area of what we call mature or mainstream or specialty semiconductors. It's in power IC, it's in analog, it's microcontrollers, it's sensors, optical sensors, non-optical sensors. And then we see it on the consumption side, and this is data that Infineon shared, also publicly said, the expectation is by 2030, 70% of the cars will be somehow related to an electrical vehicle. Could be hybrid, could be high hybrid, low hybrid, could be full electric. 70% of 100 million cars is 70 million cars, and it's more than $1,500 per vehicle in this decade. Could be the end of the decade. But you just do the math, and this is on top of that you have the ADAS, that is the Advanced Driver Assisted Systems, that take massive amounts of semiconductors. We'll come to that later. Yeah? So we actually see that back in this is a slide that I borrowed from a good friend, Lars Reger, CTO of NXP Semiconductors, and I saw this slide when he was presenting on the IMEC Future Technology Conference. And the word in Europe was, when it came to semiconductors and automotive, that's all 28 nanometer stuff and older. Well, this is what Lars presented, and this is across the entire product portfolio. And it's about sensors and actuators, yeah, that actually pick up the analog data from the sensors in the car. They basically compute this real time, close to the sensor, yeah, and then bring it into the communication system of the car so that it can be processed by the main microprocessor, which is 5 nanometer. Basically, it's what Oliver Zipser told me. He said, Peter, we are a system integrator. And if you're a system integrator, you use the entire product portfolio. And this is also what we are seeing if we later on look at some data from TSMC. So automotive will be one of the most advanced users of semiconductors in this decade. Now, geopolitics. And I've said it before, some people that know me know that what I'm going to say is 1973 revisited, the oil crisis. Oil was always there until it wasn't. And it was a strategic commodity. It was a strategic problem. And then suddenly we fast forward 2021 or 2020, and semiconductors have always been there until they weren't. And we suddenly start to realize that there is a dependency created in those decades that countries and geopolitical systems don't like. So we see this push for technological sovereignty. I think we've just seen the beginning. Because if you think about the growth rate of the industry, and you think about the geographical distribution of chip manufacturing, then if you want to create some level of technological sovereignty, and that doesn't mean that you need to do everything, you just need to stay relevant. Well, with that growth rate, staying relevant, it means that you need to invest, double up your investments as countries to make sure that you can stay relevant. Now, this is just the first phase. There will be more coming. And having said that, do we need it? Well, and that is a question we sometimes get from politicians when I talk to politicians. I said, why would we do this? Why would we in Europe or in the US, have these CHIPS Act? Because the profitability of the ecosystem, and this is a slide I always like to use, it's the 50 top technology companies in our ecosystem, which starts on the top with the equipment companies, and then we deliver our products to the chip makers, and the chip makers to the smartphone and the hardware makers, which actually ends up in basically it's the cloud companies, and it's the Microsofts and the Alphabets of this world. The EBIT in 2021, the combined EBIT of these 50 companies is $688 billion. Compound annual growth rate over the last 6 years of 19%. So the industry has more than sufficient means to pay for this expansion. So why then these government incentive systems? Well, at least we tell the politicians that asked that question, said it is not about the fact that the industry cannot afford it, but the industry has a choice to build their next manufacturing expansion wherever they want, and wherever from their point of view it's the most efficient and the less risk. And that's where they currently have their ecosystem. So if you want to pick up and build an ecosystem, you're basically creating risks for these companies. And that means these companies need to be incentivized, you can call it on the non-economical top of that risk. And this is why you need to step up. If you want to have, within your geographical boundaries, you want to have advanced or mature semiconductor manufacturing, you'd better make sure that you provide them an incentive to take away part of that top economical risk. Okay, so what does it mean? Do we have enough money? Yes, we do. And with that money and with that innovation power, which is not only money, it's also the intellectual power, the roadmap is still very much there. When this is, we'll go into some detail, but both in advanced logic, in DRAM and in NAND, we have a very clear roadmap that extends to 2030 and in many cases beyond. And this is what we're discussing with our customers these days. Just to give you an example, this is on logic. Actually, this is an IMEC slide, which IMEC, as you know, does a lot of pre-competitive work with the leaders in the industry. And this is the roadmap. It actually goes to 2036, and when you look at the metal pitch, it actually scales down to 16 to 12. The half pitch, you can do the calculation, is single digit. And that is the pitch. That's not what we would call the lithography, or let's say the semiconductor node. And the node is expressed in a different nanometer term. And even if you go, for instance, from FinFET to CFET, go from gate-all-around nanosheets to fork sheet to CFETs, you basically talk about a sub-1 nanometer node, as the nomenclature will be called, sub-1 nanometer. And that is real. This is what the research is currently working on. It's also true for DRAM. Now, this is a slide for Kinam Kim of about a year ago, less than a year ago. What you're seeing here is that the bit density will go up, and it also means that the design rules will keep shrinking, which actually means that the gigabyte density per chip will go up significantly, almost exponentially. And this is a roadmap which has been discussed with our customers in detail. So this is not just a presentation on an open forum. This is how we and our customers work together to make sure that we understand the requirements. It's not only the technical requirements, but also the economical requirements of what they are doing. Yeah? And this is where this collaboration model that we have with our customers is so critically important, and it's becoming even more important than ever before. It's also true for instance, other parts of the industry, for instance, 3D NAND, it's the same thing. Now, if you take that all together and then you go and say, so what does that mean for our business? What does that mean for the size of the business of our customers that ultimately are going to come to us to ask for machines? Well, if you then look at the industry analysts and the Tech Insights, or whether it's McKinsey or it is SEMI, their estimate of the semiconductor industry anywhere between 1 to 1.3 trillion. Yeah? But how does that then, if then we take the data and we split it over 7 segments, which is basically, you probably know this if you've followed our Capital Markets Day before. We look at the smartphone market, look at the personal compute market, consumer electronics, wired and wireless infrastructure, and then the data centers and servers, and then automotive, and then industrial. And I'll talk about the industrial a little bit later. But you can actually see that on the top row, consumer, personal computing, smartphone, that's single-digit growth. Yeah? And it's data that we use from Research Institute till 2026, 2027, and we do some extra, and we internally do some extrapolation also based on the discussion we have with our customers, based on the roadmaps that we just saw. And then you see that there are 3 areas where we see double-digit growth, and that is in the server and the data center domain. Remember the AI slide that I showed you? Yeah? It's very much about the cloud and the edge infrastructure, yeah, that is going to drive this. And then automotive. Well, talked about the automotive market and the fact that the electrification is going to see a significant jump up, yeah, in terms of the use of semiconductors. If you look at the drivetrain, an electric vehicle needs twice the number of semiconductors. And you don't talk about the advanced driver assisted systems. That's all about safety, and that will be on top. So if you look at that, there's significant double-digit growth in the automotive market. And it's also what we are seeing today, where the automotive market, as you know, there are shortages in the automotive market because it goes so fast. And the last bucket is industrial electronics. Everything that we cannot put into these 6 buckets go into bucket 7. And this is where we have these examples of the energy transition, of life sciences. At the IMEC conference, for instance, we saw a presentation of a life science company that does DNA sequencing. I actually showed a chart that sequencing one DNA 25 years ago was $90 million. Now it's 600 with that new machine, and by the end of the decade, it will be less than 50. Yeah? So, but that machine generates 20 gigabytes of data per day. Yeah? So I think if you then think about that's in that bucket. We just talked about the electrification, and we talked about the energy transition and what is needed there. And we talk about about industrial applications. I think artificial intelligence, you will find very clearly the biggest impact in industrial applications. Now, for what it's worth, it's double-digit growth. I think it's conservative for the simple reason that we don't know. We don't know. We simply cannot connect all the dots. And those dots are being created because the value of Moore's law is there. We're creating more value than we create cost with every new node. And then some intelligent company or a group of intelligent people is going to think of an application that we currently don't know of, or that we cannot assess in terms of size and impact. It's basically the question you've been asking me for 25 years. You said, Peter, what's the next killer application? And I said, oh, same answer, I have no clue. And this is also what the CEO of one of our major customers told me when I said, why didn't you tell us you needed so much more mature tools? And he said, Peter, because we have no clue. And that's happening. Yeah? And that's happening throughout the industry. Why? Because we're continuously creating value. And in that bucket, That's where we'll probably see the biggest surprises. But this is what we take. This is what we currently know. And we take those growth rates and we then say, okay, what we at ASML, taking all that data, taking those 7 buckets, what do we think? We think if we add it all up, it's going to be about a CAGR of 9%. And it's, well, pretty close to 1.1 trillion by 2030. This is how we look at the world, at the end markets, in combination with the discussion we have with customers on their roadmaps. Now, what does it do to wafer demand? Now, I'm going to take you back to last year, because one of your questions must be, you know, last year you did the same tricks. You know, you went through it and you missed a couple of things, and we did. Now, one thing I told you, the impact of the energy transition, we didn't take into consideration the way we do it today. Yeah? So last year we actually said, when you look 2020 as the base, that by 2025, on advanced logic, we would probably add 130,000 wafer starts per month per year. That's this 0.13 on the top row. And on DRAM, we say it's about 80,000. And on NAND, it's about 100,000. And on mature logic, where we were most wrong, it was 200,000. So we said, well, by 2025, probably the industry needs to support the growth of our customers, which was the previous slide. We need about 510,000 wafer starts, 505,000 wafer starts. Yeah? Now we're a year later, and we have to adjust a couple of things. They're predominantly in the logic space. They're predominantly in the logic in advanced logic. Yeah, and that is basically it's the increase that we're currently seeing because we underestimate a couple of things. I'm going to go into some detail later on. But for instance, the focus on energy efficient performance in high-end semiconductors. Yeah, and I'll talk about that later. But it actually leads to bigger die sizes. We're now having insights into what these die sizes are going to look like, which is different than what we thought last year. But the biggest jump up was in mature logic. And this is actually where our biggest shortages are. Our shortages are in KRF, are in I-line, are in dry ARF. It's 15-year-old technology. This is where, and why is that? Because everything I just talked about in terms of automotive, energy transition, is not about 2-nanometer chips. This is about 28, 45, 65. It's about analog to digital chips. It's about power ICs, very important, smart power ICs. Yeah? And then we're talking about microcontrollers, sensors, optical and non-optical. That's in that bucket. And this is where we did much more research and insight together with our customers, and this is where the biggest shortage is. Now, when you then look at, when you then look at what that means for 2030, our compound annual growth rate in terms of wafer demand is then going up to 6.5% with in absolute terms the biggest growth in the mature market. Yeah. And it's driven by, like I said earlier, it's by energy efficient focus on advanced semiconductors, and it's the mature market basically connecting more dots than we had sight on. And that's clear, and that's what we're seeing today also. I mean, also for this year, for 2023, next year, we have a significantly higher demand on our KRF and I-line and dry ARF output than we can make. So there's a significantly higher demand.